Good morning, everybody. Welcome to Coffee with Carlson. Today on the show, very special for you. I've got my hat on. It's cold. It's Florida. I know. What can I say? We like it. So we're getting really close to the year end. Today is, what is today? Today's not actually today, but today is Monday, 14th. December the 14th. I'm recording this in advance. Going to try this out. I've had too many technical difficulties with the live show. We'll probably still try and do some midweek shows. I'm going to start trying to do something on Wednesdays if I can. But for now, I'm going to pre-record the show, make sure we get it all in line and everything all set. But that doesn't excuse you from enjoying a nice warm cup of strangely warm coffee in the morning, especially on these cold mornings. Can really help out. Stop by Legacy Bicycles and grab you some whole bean ground coffee, pods, whichever you want. They've got it. Go get it. It's good for you. So again, my name's Jeff Carlson. Welcome to my show. Today, I'm going to talk about some more year-end issues. And the main issue I wanted to cover today is bonuses. Big year-end topic. Comes up a lot. My mom, my office manager, we were just talking about it the other day. A lot of my clients calling around now to try and calculate those. A lot of my clients don't call to figure out how to calculate those. A lot of people do it wrong. We have to fix it after the fact. And this really applies to any bonus, not just a year-end bonus. You can calculate, so let's dive right in. You can calculate a bonus for anyone, for an employee, based on any criteria you like. You can do it based on overall profit sharing for the year of your company. Some people do that, divvy out a certain percentage of the profits to share in it. Small business owners, it's a good thing to help out with the employees. I know that our company at the beginning of the year when COVID hit and some of the incentives started to come through, the idea was, and in the past too, there was one where some of the benefits to small businesses to help them, a lot of those are related to keeping people employed and helping out your employees. So we chose to give some bonuses each time those things have occurred. And the tax law has changed. We did it a couple of years ago when Trump first changed the tax laws. Give some bonus out to your employees. So again, any reason you want to give it to them, I think it's a good idea, especially to reward employees that are the backbone of everything that we do. So calculate it however you want. Do it any term you want. You can give them, you can give it to them in cash, check, however you like to do it. But here's the important part about bonuses. If you have employees and you're going to give them a bonus, especially, well, any time of the year, there's no especially, you have to run it through payroll. You can't just give your employees a $100 bill and say, thank you for your service for this year. Technically, you would then have to gross their pay up by the $100 and take taxes out. And that's typically what happens. I actually just got an email from a client today. We actually worked the process out a couple of years ago because we got the information where a lot of our business clients are after the fact, not live. If I do your payroll, then we'll kind of see it ahead of time. But in this particular instance, they want to give all their employees a check at the holiday Christmas party. So we end up cutting the checks for a gross fixed amount, say $500 per person. We give the checks out to them, and then we take the taxes out during the next payroll period and don't really treat that as a paycheck because it does, even though it will ultimately end up showing up on a paycheck, sometimes it doesn't mean as much to the employees if you give them their regular paycheck and add a bonus onto that of $100 or $200. Sometimes it doesn't matter, but I think it does make a difference if you walk to them, especially as the owner, hand them the check, say, thank you very much for what you did this year. We really appreciate it. You helped our company come along, but make sure that they understand that it's going to come out of their paycheck later on. So in this particular instance, say we give them $500 each. Later at the next payroll period, we're going to have to add $500 to their paycheck and subtract the net amount, whatever the check that we gave them was, and treat it kind of like an employee advance almost. It's really how it looks from an accounting standpoint. And then deduct the taxes out of it. So if their normal paycheck was $500 and you gave them a $500 bonus, then their net take-home pay in that particular pay period is going to end up being less than what it normally would have been because it has to compensate for the taxes that came out of the original check. Now, what you can do as an employer, reach out to your accountant or payroll tax provider ahead of time. Hopefully that's Carlson Accounting right here in beautiful downtown Sebring. If it's not, call us. We're available anytime. We'd love to help you out and do these calculations for you. Call them up and tell them what you'd like to do. And what we can figure then is if you want to give them $500 as a net cash in their pocket, we can gross that up so that you know where the additional cost is going to come in for you, because you're going to have to match Social Security, Medicare. They're going to have to pay a portion of that. So you can play with those numbers a little bit. You could do it in your own payroll software if you do that as well. But you want to make sure that you're calculating the taxes and figuring it out ahead of time for two reasons. One, you want the employees to understand that they're going to have to. We want the employees to understand that they're going to have. Could you tell that there was nothing in there? Yeah, it's empty today. It's afternoon. They're going to have to understand that they're going to have less of a paycheck the next time around, even though you're giving them this bonus ahead of time. So probably a good idea to have the check calculated up front. Don't add it to their regular weekly, biweekly, monthly payroll check. Give them a separate check, but go ahead and take the taxes out. We can round it so that it comes out to a flat amount, say $100, $200, $300, $500, whatever it is. But the taxes are already taken out, so you don't have to worry about the additional paycheck later on. Now, I have had some that were really big, and if we find out about it after the fact, a week or two or a month later, and you gave them a net check for $500 with no taxes stated on or withheld, then we're actually going to have to gross that up, which is going to cost you more money for the bonus. So if it was $500 net check, the gross paycheck was probably closer to $650, $700. So you're talking about actually from your records giving them and your cash position, giving them a bonus check that was more than what you thought you were giving them. So the bottom line for everyone out there, all my business customers, year-end bonus, great time not only to celebrate the birth of Christ, but to also reward your employees for all the hard work that they've put in for you for the year. Just make sure that as you do it, you calculate it properly. And if you need our help, we're always here to give you a hand. Again, this is Coffee with Carlson. My name is Jeff Carlson, and I really appreciate you watching the show. If you like it, if you're watching on YouTube, hit all the things, and maybe someday I'll get sophisticated enough to say all the stuff all the other YouTubers do at the beginning of their videos. But for now, it's just me, skull cap, empty cup of coffee. Thank you and have a fantastic day. And we'll see you next Monday on Coffee with Carlson.